You did it. And we're live. Good morning, Steve.
Hey, Stacy, how are you?
Good. Happy Thursday.
Happy Thursday.
A little bit of a different show. We're missing our buddy Keith. But, you know, they say, what is the saying that you like, everybody's replaceable? Well, I would say he's not replaceable. Like, we totally miss him when he's not here. So.
In baseball, they tell you sometimes you have to go way down along the bench to grab somebody, you know. So you pulled me off the bench. Keith is irreplaceable.
Yes, he is. Well, we appreciate you being here. So tell everyone just a little bit about your background, because you don't just do mortgages. You also have years of experience doing something else. So tell us about that.
I do. I got licensed in insurance and securities back in 1990, and ever since I've had my securities license. So I also have a securities business that's called Copper Financial, and I manage about $30 million for people all over the United States.
That's super cool. So we're lucky to have you on our team and have this background, and you often give us all updates of what's going on. So can you give us a little education on what's going on in today's market?
No problem. We had some big news out of Europe. The European Central Bank today said they're going to extend their bond buying program. So what that means to everybody is that means that not only that our interest rates are going to stay lower, but internationally interest rates are going to stay lower also. The more that central banks buy their own paper, the longer dated maturities and also in corporates and sovereign debt, the yields go down. That keeps all of our mortgage paper buoyed and keeps our mortgage rates down. So they've extended the program through April of 22, I believe, is what the announcement was. And they're going to start buying corporates and other debt. So we're into this market probably, you know, the Fed talked about going 3 years out. Europe's going at least a year out. So we're going to have smooth water and trailing winds for, you know, another 12 months.
Wow. So Keith and I often, actually every show, talk about if we think rates are going to be going up or down. So what's your prediction going into 2021?
Well, the best I can tell is they're going to go sideways. We've enjoyed very, very low interest rates. The Fed's going to keep the pressure on, so I believe that we're going to go sideways from here. The 30-year hit about 2.81 the other day, and then it hit 2.79 on the average. I think that's probably where it's going to kind of hover for a while.
I would agree with you. If I'm going to speak for Keith, I think he's going to say it would be higher than that.
So do you want to know what the new phenomena is going to be for next year?
Yes. What is it? Give us all the secrets.
You're just going to die. We are going to go through another hyper purchase market, and it's going to be very tactical. A lot of people are going to start buying second homes now that they're used to being mobile and being able to work from anywhere. Communities that like Austin, Texas, Phoenix, and areas that have good connectivity, have good infrastructure. People are going to buy second homes, and we're going to see snowbirding like no tomorrow, or maybe even mountain birding if somebody wants to go to the mountains. But you're going to see a lot of second home purchases, and think of it this way. If my interest rate 2 years ago was 4.625 and my interest rate today on my house is 2.5, I literally can buy two houses with the same payment I was making 2 years ago.
Yeah, that's incredible. That's really crazy.
The
We were discussing last week about the purchase market next year. So what we were talking about is it will be the largest purchase market that we've seen in 20 years. So it's going to be a busy year.
And the people that got pent up in those skyscrapers in New York and San Francisco and Seattle, they're going to want to get out into the country. There's going to be a large migration.
Yeah, and then maybe out to where you're at. You guys are in a great spot.
Even in the outpost.
Yeah, my folks moved out by you guys a few years ago. I thought they were crazy, but with being stuck at home, they're in the most beautiful place they can be. So they're so fortunate. So tell us a little bit more about the market and just how it seems to be like records and it keeps going up. And what do you think is going to happen? Is the ceiling going to fall any day?
Well, markets are priced 6 to 9 months out, and the big debate right now is the virus going to tube our economy, or are we going to get a stimulus bill, an infrastructure bill, and a vaccine? It's a race. And the market's kind of trying to play both sides right now, which is what makes a market. Somebody's buying and somebody's selling all the time, right? So in my humble opinion, not that I'm a virus expert or a vaccine expert or anything else, I think as we get the vaccine out, which is obviously going out right now, they're voting today, by the way. The FDA panel is voting today on. Well, they have a hearing and then they're going to have a vote to authorize the Pfizer vaccine, which means like within a couple of weeks they're going to start rolling it out. So if you think that enough people will get the vaccine and they'll start becoming active, and then the states can start lifting restrictions, the stock market again is looking 9 months out. Hey, maybe 35 to 40% of people have the vaccine, and that might be enough to get the economy going again. And on top of that, you take a stimulus bill and an infrastructure bill back to back. Probably we're talking trillions again being thrown into the economy. I say the market stays where it's at or goes higher.
Wow. Okay. That's interesting. I haven't heard someone say that.
Well,
but you're you're the one that tells us, so that's awesome.
That's what makes a market.
Yeah.
There's people that are paid to tell you it's going to go down. There are people paid to tell you it's going to go up, and then there are people that sit there and try to figure it out, like me. And I'm not paid to tell you what direction. I just want my customers to be taken care of.
Yeah, for sure, definitely. So what else knowledge do you have to share with us and what's going on?
Well, as far as like what to invest in, you're seeing a lot of rotation in the market now go to cyclicals because if an infrastructure bill is going to hit, then your Caterpillars, your big industrial companies should benefit from these activities. If on top of that there is a migration of people, home builders and a lot of other people are going to be involved. Everybody from the home builders down to the people that make the lawnmowers. As more properties get developed, more activity will happen. So there's a little bit of a migration, and you've seen this broadening of all the stocks that are being bought. And then, of course, there's the airlines and then the leisure and hospitality stocks that will be benefiting from a lot of pent-up demand. I can't wait to get to Hawaii personally. So I want to spend some of my money in another state right now. So again, I think a reopening, a vaccine market is going to bode well for us. And we can't, with 5G, with the 5G rollout, we can't make enough semiconductors and all the different little parts that make up technology right now. The semiconductor stocks are going crazy. They've been on a tear this last month. We can't make enough stuff.
Like, give an example of, what did you say, semiconductor?
Semiconductors like um, Micron technology, AMD, the semiconductor equipment stocks, the whole technology, all the technology that's put into every cell phone and every device, they can't make it fast enough.
Yeah, that's interesting. So I have two questions thinking of. One, what do you think with the new administration, how that's going to impact either the mortgage side or the financial industry?
Well, the long and the short of it is, I think our industrial spirit always, it doesn't matter whether it's Republican or Democrat, we always find a way to persevere and innovate and grow. The Democrats might put a little bit more pressure on some of these tech stocks, etc. Maybe a little bit. I don't think it's going to be popular. I think that the new administration is going to get an infrastructure bill out. I think that will actually happen this time. So that means that not only are we going to get stimulus checks, but we're actually going to get building projects and fiber projects and just general things to improve our infrastructure, maybe even solar and wind projects that'll be rolled out. So I think they're going to spend a lot of money early, and then we'll just have to see what happens from there.
What do you think? Do you have any predictions on the foreclosures or short sales from people currently in forbearance going into next year?
Okay, so there's a headwind. That is a headwind. What I mean by a headwind means that if there's something that stocks are going to have to stumble over, or the market's going to have to stumble over, is what do we do with the 7% of the people that decided not to pay their mortgages? And then what do we do with the renters that haven't paid their rent for 4 months or 5 months? I don't see any political engineering to solve that problem yet. And I don't see anything in any of the bills. So I think that is a stumbling block. I think what's going to have to happen is that people are going to have to be made whole. And so landlords are going to have to be made whole. Mortgage companies are going to have to be made whole, because you can't ask a mortgage company not to take a premium payments for 5 months and then turn around and say, well, you got to eat that loss. That's just not fair. The government created the shutdown. The government is passed laws to let landlords not evict tenants. And they also made the laws that, hey, you can defer payments on your mortgages. And if somebody can't pay, there's going to be a whole nother uprising of people that say, well, wait a minute, you guys said we didn't have to make these payments. I didn't understand. And they'll go through this probably like a class action attempt to have the government keep them in their homes. And I think the government's going to have a big decision to make in about 5 months.
Yeah, I agree. I think it's a big issue, and not a lot of people are talking about it. So I appreciate your perspective on that. So you gave us a lot of information. We certainly appreciate it. Any final words or things you want to share with the group before we say goodbye?
The long-term effects of this year are going to ripple for a long time. So I would stay invested, because if inflation does come with all the spending, hard assets are going to be the things that you're going to want to keep. So if you are looking at a second home, I would buy it this year, and I'd take advantage of that interest rate. and don't worry about whether you're buying high or low, because eventually this inflation is gonna disseminate all the way through for 7 to 10 years, and I think it'll make another good investment for you. But you're right, the pricing right now is tough to swallow. As far as the things that I worry about, I worry about the people that haven't had the luxury of saving. It just would encourage people to buy hard assets, improve their credit, get established, and get in while these rates are low. And then I guess from our perspective, from the mortgage side, is extend your net. And just remember, everybody out there is a potential buyer next year, even if they did something this year. So I would encourage all our fellow loan officers to stay with their customer base and stay active. Make sure that they know what they're doing.
Yeah, it's gonna be another busy year. So maybe take a few days off and then get ready for 2021.
I'd love to take a few days off.
I know. Wouldn't we all? Well, thank you, Steve. Any reviewers who are watching, definitely you can always find Steve and reach out to him, and he'd be happy to discuss any of these topics further or help with your mortgage or investment needs. So we appreciate you. I hope you have a good day, and I'm sure we'll be talking soon.
All right. Thanks, Stacy.
All right. Thanks, Steve.
Yeah.
And we'll see everybody, I think, next Thursday. I got to double check with Keith. But until then, everyone stay healthy, stay happy, have a blessed day, and we'll talk to you guys soon. Thank you. Bye.
Bye.